For 3 years, there was only one story in the stock market: Nvidia, the company that powered the entire AI revolution, the most valuable company on the planet. If you owned Nvidia, you won. Everyone else was a footnote. But something happened over the last few weeks that nobody saw coming. While you were watching Nvidia, Wall Street quietly moved its money somewhere else. And the numbers are almost hard to believe. One chip company is up over 200% this year. Another is up more than 750% in 12 months. A company everyone had written off as dead just hit an all-time high. This is not a small rotation. Analysts are calling it a changing of the guard in AI. The money is leaving the king and flowing into five names most retail investors aren't watching. Let me show you exactly where it went. First, let's be clear about what's happening because this is the part most people get wrong. Nvidia is not collapsing. Nvidia is still a phenomenal company. It's still growing revenue around 70% this year. The point is not that Nvidia is bad. The point is that for 3 years, Nvidia absorbed almost all the attention and almost all the money in the AI trade. And now, for the first time, that money is spreading out. Think about it like this. In the early days of a gold rush, everyone buys shares in the one company that found gold. But eventually, smart money realizes the people selling shovels, building the railroads, and supplying the water make just as much money with less risk. That's what's happening right now in AI. The shovel makers are having their moment, and Wall Street has picked its favorites. Here are the five. Number one is the most shocking story on this list: Intel. 18 months ago, Intel was a punchline. The company that missed mobile, missed AI, fell years behind its rivals in manufacturing. Investors had given up. The stock was trading under $20. Then something extraordinary happened. A series of events completely rewired the story. The US government took a direct ownership stake in the company, betting on American chip manufacturing. Nvidia itself invested $5 billion into Intel. And then the big one. Apple, after more than a year of secret negotiations, reached a preliminary deal for Intel to manufacture chips for its devices. For a company whose entire turnaround depends on proving it can make chips for other people, landing Apple is a credibility earthquake. Watch what the stock did. From under $20 to over $130. Intel just had the single best month in its 55-year history on the market. It hit an all-time high, clearing a peak the company set decades ago. The market is treating Intel like a brand new company. Now here's the honest part, because I'm not here to sell you a fairy tale. Intel's manufacturing division is still losing billions of dollars. The Apple deal is preliminary, not confirmed. Wall Street's average price target is actually far below where the stock trades now. This is a turnaround that is being priced as if it's already complete, when it's really just beginning. Intel is the highest risk, highest drama name on this list. But you cannot tell the story of where the money went without starting here. Number two might be the most underrated company in the entire AI supply chain: Micron. Here's the simplest way to understand what they do. Every AI chip, every Nvidia GPU needs a very special, very fast type of memory sitting right next to it to function. Without that memory, the most powerful AI chip on Earth is useless. It's like having a Formula One engine with no fuel tank. Micron is one of only 3 companies on the planet that makes this memory at scale. And here's what just happened. Demand for AI memory exploded so fast that the supply simply doesn't exist. Micron's own CEO said that key customers are only getting 50 to 2/3 of what they actually need. Read that again. The biggest tech companies in the world cannot get enough of Micron's product, no matter how much they want to pay. When you have a product the entire world needs, and you physically cannot make enough of it, one thing happens to your pricing. It goes vertical. The stock is up over 750% in a single year. Micron blew past an $800 billion valuation for the first time ever. This is what a genuine shortage looks like when it hits a company's earnings. The memory market is dominated by Micron and a couple of overseas rivals, all of them in the middle of a historic run, because when capacity can't be added fast enough, the few players that exist make extraordinary money. Number 3 is the one company that has been directly taking the fight to Nvidia: AMD. For years, AMD was the perpetual number 2. Always close, never the leader. That narrative is breaking. Here's why. The entire AI story so far has been about one type of chip, the GPU, used to train AI models. But there's a second, quieter shift happening. Running all these new AI agents, the ones that book your flights, write your code, answer your emails, requires a massive amount of a different kind of chip, the CPU. And AMD is the company leading that charge. On their last earnings call, AMD's CEO Lisa Su raised the company's forecast dramatically. She said AI agents are driving, in her words, tremendous demand. AMD's earnings, revenue, and guidance all blew past expectations on the strength of data center growth. Major banks upgraded the stock immediately, pointing to a structural shift that's just getting started. AMD's results matter for a reason beyond AMD itself. They prove the demand shift isn't one company getting lucky, it's the entire sector moving. That's why it's on this list. Number 4 is the name that will surprise you the most because it's a 175-year-old glass company, Corning. Here's why a glass company is suddenly an AI play. The company that makes the glass on your phone screen. Inside the giant data centers that run AI, the chips have to talk to each other at almost the speed of light. They do that through fiber optic cable, incredibly pure strands of glass that carry data as light. As AI data centers explode in size, the demand for this specialized optical glass is exploding with them. And this is not a rumor or a hope. Corning just signed a massive deal directly with Nvidia. It involves the development of 3 brand new US factories dedicated entirely to optical technology for the chip giant. Think about what that tells you. Even Nvidia, the king, needs Corning. When the company everyone is rotating out of is signing 9-figure deals with a company on this list, that's the clearest signal possible about where the real demand is. Corning more than doubled this year. It is the quiet infrastructure play under the entire AI build-out. And number 5 is the twist. Number 5 is Nvidia itself. After everything I just said, why is the king on a list about where the money is leaving? Because this is the part the headlines get wrong. Nvidia did not fall. Nvidia is up over 80% in the last year and still sits at a $5 trillion market cap. What actually happened is more interesting than Nvidia is over. The AI trade got bigger than one company. Nvidia is now growing roughly in line with the broader market instead of crushing it, because the gains are spreading to everyone it does business with. So the real lesson here isn't to abandon Nvidia. It's to understand the shape of the trade has changed. Going forward, the money is rewarding the entire kingdom, the memory makers, the manufacturers, the glass suppliers, the challengers. Nvidia is still the center of gravity. It's just no longer the entire universe. Before you do anything with this, here's the honest reality check. Because every one of these stories has a catch. Intel is being valued for a turnaround that hasn't actually proven itself yet. Micron's pricing power is real, but memory has always been a brutally cyclical business. AMD trades at a rich valuation that assumes the CPU shift keeps accelerating. Corning is the steadiest, but it's also the slowest grower. And the entire sector has already run enormously. You are not early to this. You're reading about it after these stocks have already doubled or more. The changing of the guard is a real structural shift, but a structural shift and a good entry price are 2 completely different things. The first quarter earnings season is what validated all of this. The next one is what tests whether it continues. So there's the map. Intel, the impossible comeback. Micron, the shortage nobody priced in. AMD, the challenger finally landing punches. Corning, the silent infrastructure. And Nvidia, the king who's now sharing the throne. The single biggest mistake in investing is fighting the last war, owning the story that already happened instead of the one that's unfolding. For 3 years, the story was one company. That chapter is closing, and a new one is being written right now. If you want me to break down more of these AI shifts that Wall Street is acting on before retail catches up, subscribe. The next video is on a pattern I keep seeing in the companies that 10x'd from their IPO, and it's even more counterintuitive than this one. I'll see you there.